Hello, everybody. In the current affairs this week, the week ended 8th of December 2024. This week saw two important events happening on the international scene. I would like to talk about the economic implications of both these events. The first was the vote of no confidence against the French Prime Minister in the French Parliament. The reason for this vote of no confidence was that the government had proposed an expenditure cut in the budget to the extent of 60 billion euros in order to see that the finances of the government are in a proper shape. The fiscal deficit of France is now ballooning to the extent of 6% of its GDP, which is leading to a lot of debt by the French government. So in order to save resources, this was an expenditure cut which was proposed, but this economic action led to the fall of the French government. The another event which happened on the international scene was the proposal by the South Korean president to have martial law in South Korea. South Korea is an important emerging market and a respected emerging market, and when it comes to investments into different emerging markets, the international investors would look at South Korea very significantly. But now, with the happening of this event, wherein such kind of an abrupt action was proposed by the South Korean president, investments in South Korea would definitely suffer on the projects which somebody would like to set up in South Korea, and also on investments in its equity markets. This will also impact the South Korean currency. The impact of it, insofar as India is concerned, is that now India, in its allocation for international investors in the emerging markets, India would have a better standing, because there is one economy, which is South Korea, is now losing its shine. This week, RBI announced its monetary policy. The repo rate was kept unchanged at 6.5%. And this was on account of the fact that the inflation estimate by the Reserve Bank of India has changed from 4.5% to 4.8%. So the RBI was not comfortable cutting any interest rates, because inflation is, in accordance to the RBI's expectation, is at the higher end. But in order to ease the liquidity in the system, RBI proposed to cut the CRR rate, the cash reserve ratios, which the banks are supposed to maintain from its overall deposits, from 4.5% to 4%. So this 0.5% cut of CRR will lead to a substantial amount of liquidity available for the banks to lend, and that would increase a better lending in the economy on account of more funds available with the banks to lend. The growth rate forecasts for the financial year 24-25, which were earlier estimated at 7.2%, on account of the kind of lower growth which the Indian economy saw in the quarter from July to September, the growth forecasts for 24-25 financial year have now been reduced by the RBI at 6.6%. But this lower forecast was on account of whatever were the lower GDP rates in the quarter, which was the last quarter at 5.4%. But in the balanced 2 quarters of 24-25, the growth rate is expected to bounce back. And when it comes to the stock market is always future looking rather than for whatever was there in the past. So the Indian stock market was in a positive trend. Nifty 50 was up by more than 2%, and Nifty mid cap and Nifty small cap both were up by more than 3.5% each. The FIIs this week, after at least a couple of months, were net buyers to the extent of 12,000 crores, and the domestic institutional investors were buyers to the extent of 1,800 crores. The US stock market, Nasdaq Composite, was up by more than 3%, and the tech stocks strongly rallied, while as the S&P 500 was up by just 1%. This is all for this week. Thank you.